What's going on, guys? It's Aaron from Market Alert, giving you your daily market alerts for stocks. And today, let's find out if Microsoft is worth the buy before the earnings report comes out this week. But before we get into it, if you like what we do here, smash that like button and be sure to hit that subscribe button too. It really helps us with the YouTube algorithm and gets these videos out to you guys. And don't forget to comment below your thoughts on if you think Microsoft is going to tank this week after the earnings report. Alright, let's get into it. Microsoft is set to report its Q3 fiscal 2020 earnings results on Wednesday, April 29, as part of the week that features fellow industry heavyweights such as Google and Apple. The coronavirus has already forced giants like IBM to withdraw their guidance, and the overall earnings picture is expected to be rough, with things set to get worse in the upcoming quarters. That said, Microsoft stock is up roughly 9% in 2020 against the S&P's 500's 13% downturn. So it's time for investors to decide if they should consider buying Microsoft stock as a safe haven amid what could be more volatility. Stocks swung between small gains and losses in the morning's trading Friday, in a week that has seen S&P 500 and the Dow cool off after hot streaks, which saw the S&P climb roughly 25% since its March 23rd lows. The positivity came on the back of hope that social distancing and stay-at-home orders to help slow the spread of the coronavirus are working. Meanwhile, governments around the world are starting to figure out how to start reopening parts of the economy after millions of people lost their jobs in a matter of weeks. There might be even more a push to try to return to work and production when the full impact of the coronavirus-induced shutdown is felt. For instance, the latest Zacks estimates call for an overall S&P 500's earnings to fall over 14% in Q1, down from the positive 4% projected in January. And things are expected to get worse, with Q2 earnings now expected to plummet 28.1%. and Q3 expected to suffer a 15.3% decline. Energy, transportation, autos, consumer discretionaries, and other sectors look as though they will be hit the hardest. However, the tech sector in the S&P 500 earnings are only expected to slip by 1.9% in the first quarter. So what does this mean for Microsoft? Well, Microsoft stock appears nearly as safe as any tech stock at the moment, given its broad portfolio that now heavily features cloud computing alongside software and solutions geared toward businesses. Microsoft has become a cloud leader, and many of its offerings might shine during the current work-from-home environment. The firm's Azure cloud competes with Amazon, while its subscription-based Office 365 suite is essential for big companies, big and small, students, governments, and more. The coronavirus has also brought Skype and its work-focused communication platform Teams to the forefront, and Microsoft looks ready to take on challenges such as Slack and Zoom, and not to mention, Microsoft owns LinkedIn. Microsoft did warn in late February that it was likely to miss its quarterly sales guidance for its more personal computing segment. Luckily, at the time, it said its Q3 guidance remained unchanged for its other units, which is a great sign since its productivity and business processes revenue jumped 17% last quarter, while intelligent cloud sales surged 27%. And its personal computing segment revenue popped just 2%. Along with its cloud-heavy growth model, which should be able to expand during the current economic environment, Microsoft's dividend yield rests at 1.19% and is trading at a discount compared to the industry average. Microsoft also has $134 billion in cash, cash equivalent, and short-term investments to help weather the storm and likely even continue to buy back stock. It announced a new $40 billion buyback program last fall. So what does the future look like? From Zacks estimates, they call for Microsoft's Q3 fiscal 2020 revenue to climb 10.7% to reach $33.85 billion. This figure could mark a small slowdown compared to last quarter's roughly 13.7% sales growth. Peeking ahead, the historic tech giant's full-year revenue is projected to climb 11.6% and 11% respectively in the financial year of 2020 and 2021. These would come on top of 2019 and 2018's 14% expansion and easily top 2017's roughly 6% growth. Microsoft's adjusted Q3 earnings are expected to pop 11.4%, with its full-year earnings per share figures projected to surge 17% and 11.1% respectively in the fiscal 2020 and 2021. Investors should note that Microsoft has topped our quarterly earnings estimates by over 10% in the trailing 4 periods, including a 14% beat last quarter. So what's the bottom line? According to Zacks Ranks, Microsoft currently holds a position of 3, which means hold, and that has seen its earnings revision trend in the wrong direction recently. That said, we've seen that in Q3 financial year of 2020 and 2021 estimates remain elevated from where they had been 90 days ago. Shares of Microsoft have jumped over 30% since March 23rd and push it up by 9% in 2020 and 33% in the last 12 months. Despite the climb, Microsoft still sits around 9% off its 12-week highs. Therefore, Microsoft seems like a safe long-term investment, even though it could fall in the near term amid the broad economic uncertainty. Well, there you go, guys. My thoughts on if Microsoft is worth the buy next week. Thanks a lot for tuning into Market Alert. If you like what we do here, be sure to hit that subscribe button. It really helps us bring content out to you guys, and hit that like button too. And I'll catch you guys on the next one. Cheers.